future. We're talking real money.
The countdown clock is a-ticking. We are now at T-minus 3 weeks and counting. It's time for you to learn to use a podcast application on your phone, computer, or tablet. Because talking real money ain't going to be on the radio no more starting in April.
What?
What? You didn't know that?
I know it gave me the memo. No, we passed it along. What am I, the ninth guy on the deal team or something? No.
Pretty much most
I'm not
of
doing it. I'm
pretty
going
much
to
most
keep
of the
doing the
time.
show.
You gonna be
I'm
here?
going to keep doing the show. I don't care.
You'll be the
Yeah.
only one
What am I going to do? What am I going to do?
Oh, I'm
What would
sure
I
your
do?
wife can think of something for you to do.
She's not that type, thankfully.
Oh, okay. My wife can think of something for you to
Oh,
do.
yes, your wife can think of
She's
something
that
for you
type.
to do. And she will.
Hi,
Yeah,
everybody.
so.
Welcome to Talking Real Money, the radio show that becomes a podcast and then will be nothing but a podcast in just a few weeks. So you have to find your favorite podcast app on your phone or your device. It's easy. There's a podcast app there. You should be listening to the podcast anyway. So start practicing. Start practicing like later today or tomorrow.
And you'll still be able to reach us, of course, by sending us questions directly through the website, et cetera, and we'll be still able to call you and have conversations.
Oh, heck, not only that, but, you know, we take calls on Saturdays at 855-935-TALK. That's 855-935-8255. And that number will continue to work. You'll be able to call us and set up a time to talk with us, get your question answered at the same number, 24/7, 855-935-TALK, or you can go to talkingrealmoney.com on the contact form. Did that all make sense?
It pretty
if
much,
you can follow, I'm
idea.
confident the audience can.
Yeah. Right. And by the way, speaking of the audience, I want to thank them for coming out to RetireMeet 2026 last week. A lot of fun. Great to see all of you. All kidding aside, it was good.
It was fun except for the flight home.
Ugh, can't believe you did the red eye, dude. That's crazy.
I thought I could do it. I thought I
tried it once at like 30 and it didn't work, so it doesn't get any easier.
I had greater faith in myself, and I did it, and I was not happy. I have to tell you that I don't know what incompetent designer created those new stupid first-class seats on Delta. I know. Yeah, first world problems.
Oh, real tough all over. Okay, yeah.
But man, they're uncomfortable and hard to sleep in. Those are bad seats, Delta.
Sorry.
I'm a big Delta fan, but none of those seats. Although I'm sure it's more comfortable than the back of the bus. Anyway, welcome to Talking Real Money, where we're going to actually talk about money. And the money we're going to talk about today is the money problems that so many seniors face today. While we talk a lot about $1 million portfolios, those are very few people have $1 million retirement portfolios. As a matter of fact, not
you looked up the number,
not including home equity.
Yeah, setting that aside, okay.
It's less than 3% of Americans over 65 who have $1 million or more in their retirement savings. So those of you who have that,
congratulations.
You're special. You're really unique. Most people are living on a lot less, and there's a big problem with a lot of seniors getting into financial trouble.
Yeah, it apparently is getting worse and worse. It says now people over the age of 65 account for nearly a fifth of bankruptcy filings. Wow. And 80% of adult households are unable to weather a major shock, such as widowhood, serious illness, or expenses related to long-term care.
80%. Wow.
80%. I mean, you've read the notion, I think it's like still 40% of America can't afford a surprise $400 bill or something. It's small. So many people have their maxed out credit cards. Some are losing their home to foreclosure. And most of this is due, frankly, to retirement, right? Because you had an income, you were making something at least, and then you get to retirement, and then that all comes to an end. Or you have someone else in your life who is paying the bills. They're gone. These things happen.
And if you haven't saved that $1 million, which apparently 97% of you have not, you're living on Social Security and maybe, and this is only about a third these days, on a meager pension.
I thought it was like 20%, but okay, we'll let you go with the third. But, and so, okay, so the question always then when I read these things is how can we do better? But part two, how come? Where does this come from? And according to the article in the Seattle Times, the rise of all these problems can be traced back to the 1980s when employers said, we're not going to do pensions anymore. We have this other nice new invention, 401ks.
Yeah, it actually was more like the 1970s, because it was in the mid-70s that we got ERISA, the employment.
Don't remember her, but okay.
Act that established all of the controls for pensions and retirement plans, because there were a lot of companies who were getting into their pensions were getting into trouble because there was very little regulation. So they established the Pension Benefit Guarantee Corporation. Then a couple of years later, a law established this little thing called a 401k that nobody paid any attention to, but a few corporate lawyers went, oh, wait, we can do a retirement plan that really doesn't cost us much?
And so in the article, they quote a professor who says the 401k is a massively failed social experiment. Pretty strong statement.
What university was that professor from?
I think it was Idaho.
Idaho, okay.
Yeah, University of Idaho. And a researcher on the Bankruptcy Project, which is running out of funding. That's bad. Sorry, that's not really fun. Anyway, we'll continue to talk about this because it's an important topic. Really, it is. So,
are they a failed social experiment? Really, I don't think they are, unless you're looking at it from a different perspective, and we'll talk about that perspective in a minute. We'd love to talk with you and answer your questions while we can. 855-935-TALK.
Tom and Don are talking real money. Your guides to a really great financial future. Tom and Don are talking real money.
Once again, our phone number is 855-935-TALK, 855-935-8255. 401ks, are they a failed experiment?
Yeah, debatable, right? I mean, we both put it into, AI sources today, and we got different answers. It's controversial. But I will say this, failed social experiment or not, I don't see on at least the near horizon the political will to say, we're going to take care of you cradle to grave. We're going to fix that. You're going to get money no matter what, so you don't have to worry about it. I don't think that's likely to happen for a variety of reasons. Therefore, if you're an older adult and you're in one of these situations, and the article is short on solutions too, I don't have a great solution. But for anyone who's younger, who has kids or grandkids who are younger, get them to start saving, get them to make good financial decisions early on, because even if you lose income due to a divorce, death, etc., you put yourself in a better position so that later in life you can deal with it. I'm not saying it will take care of everything, but you'll be in a better position to do it.
Give us a call, 855-935-TALK. Let's go down south. Well, I'm down south, but we can go up north from me to Atlanta, Georgia. JJ, welcome to Talking Real Money. JJ?
Hey, Tom and Don, can you hear me?
Yes, we do.
Yeah. What's up?
Oh, I was on hold for a long time, so I thought maybe. Yeah, I just wanted to call to thank you. I've been trying to contact you last 2 weeks. Thanks, Tom. You called me back. And last week also I called just to say hi, but I guess you were in RetireMeet and I was on hold. So, and I've been a long time, more than 5+ years. I've been listening to your podcast.
Thank you.
I'm addicted to your podcast. So,
well, keep listening to the podcast, because we're not leaving the podcast.
Yeah.
No,
we're going to keep doing those.
Important message is we're still going to be doing the program. It's just going to be a different way for people to listen to it. Not a different way, because you're in Atlanta, you listen hopefully to podcast anyway. And that's where more and more people are listening, but we're not going to be doing the broadcast show. That's all. So.
Yeah. So, just one more thing. Don, you said you're running out of, audio questions. And I posted something through the website. It never got answered. So
okay, did you speak it or did you type it?
I spoke it. So
you spoke it.
To ensure that you have enough in your.
What was the topic?
It's like maybe 4 weeks ago.
What was the topic?
Hold on. The topic was about 1099-R for backdoor Roth IRA. Tom, you called me and you clarified. You were able to help me out.
Okay, hold on. I'm
the person who said yeah.
I'm looking back through them.
Consider him chastised here live on
I have
radio.
Man, what did you use a name? Did you use JJ?
I used JJ, I guess. Yeah.
Something happened with because I've looked. I have looked back clear to January, the beginning of the year, And something must have happened with the software, the thing that you speak into, because I've searched through every name and there's no JJ. So it just didn't work. I apologize for the technology.
This was definitely in February, I guess. So
yeah, I just went through every single caller in February and so that must have been. We use another program that actually records it and then sends it to me, and probably there was a glitch there along the way, and I apologize.
No problem, Tom.
Okay. Well, I'm glad Tom answered your question.
For all the good work. We'll miss you.
Keep listening to the podcast.
Okay. Yeah.
Okay.
Definitely. Yes.
We're not quitting. We don't want to quit. We like doing this. Thanks, JJ.
Okay.
Appreciate your call. 855-935-TALK. That's a phone number that will work even when the radio show isn't here.
Yeah.
We're only stopping the Saturday radio show, the live show. Right now we have 5 podcasts. 2 of those podcasts are this show edited into a podcast.
2 of those shows. Okay. Yeah, that makes sense. Okay. Right. We take the 2 hours, turn it into 2 podcasts.
2 podcasts.
Yeah. Right.
What we're going to do now is record during the week 5 distinct podcasts.
Yeah, I hope the week gets longer because it's going to be a lot of work.
You're not going to be working on Saturday.
All right. Oh, okay. We'll see. I think I will because I think I'll be working on the Monday programs we got to record. So my guess is I'll be working anyway. But
don't you wait a minute. See, this is the part I'm really having a problem with here.
Okay.
I've tried to discuss this with you, and I'm just going to do it publicly.
We're going to do it right here again.
Right here. Now,
Take
here's
me
the
on
thing.
live.
Don't you have
corner.
to prepare for the Saturday show before the Saturday show?
Yeah, sometimes. It depends. I usually have, and you know this, we have a number of topics that we've been debating. Saturday morning, we generally get up, we decide which ones we're going to cover, and then I go to work on them.
Can't we then maybe on Monday, before we record them, talk about them?
No, it's not enough time. I need to read it. I need not just to read the stuff, but I got to cogitate on it. I got to research
Friday
it.
And you could just take Saturday off?
No. It's going to end up being Saturdays. I'm not
so
mad
you're really
about
not taking Saturday off.
That's just the way it
the
works out.
The whole idea was for you to take Saturday off.
And do?
All right, maybe nothing. All right. Let's go
to watch my grandsons play soccer.
That was it. I forgot. That was it. You were going to go watch your grandsons play soccer.
I'm looking forward to that. Yeah.
All right.
And that'll be fun.
And the World
Cup's
today. Coming up. There'd be something for you to
today.
Watch.
You know, there's still snowing. 5 inches of snow on the ground. 5 inches of snow
Don't you guys play soccer in the snow, too?
No, you can't play it in the snow.
Can't see the line.
In a snowstorm, but not with this much on the field, no.
All right, so let's go to Sammamish, shall we?
Yeah, let's do it.
Guess who's in Sammamish?
It's shocking.
Jason? Shocking. Hi, Jason.
Jason.
Good afternoon, guys. I'm really sad to hear the news. I know you're going to the podcast, but I'm going to miss my routine of calling you every Saturday, or most Saturdays.
Well, here's the deal. You can still call us, and then we'll just call you back.
We're going to record calls all the time.
Yeah. We're going to make it work for it. We're going to make it work. Hang on a minute, Jason. I didn't realize how quickly the break was coming because Tom and I, of course, digressed again, which is no big surprise. We'll be right back. 855-935-TALK is the number. Don't go away.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
Now we go back to Jason in Sammamish. Hey, Jason.
Hello, guys. Yeah, I was just saying, it's I'm really going to miss my my routine of giving you guys the business every few weeks, every week,
Just give us a new form of business.
It's different. That's okay.
Well, so I guess my question is, obviously, during the week I'm not as available as I am on Saturday, but how is that? So I call into the number, I leave a message, and you call me back, and then it's what when do you call me back for the live call?
It'll be in a recording as we're recording a podcast.
No, he's saying when will you do it?
Oh,
we'll probably reach out and say,
do it. We'll
can
have
you do
some
it here or
various
there?
times, but generally speaking, it's going to be Monday and Wednesday late morning.
Yeah. If it doesn't work, we'll probably
call back.
Oh, it'll be late. It'll be early
times.
morning for you guys. I'm sorry, on the West Coast.
Yeah, probably. There'll probably be some. The technology allows us to do it anytime, so we'll probably have some variability there.
Okay, but even for the weekly podcast, there's not going to be. Obviously, there's no way to do a live call-in portion, correct?
Not now. The technology's complicated. complicated. And the problem
Anybody
is getting everybody to
Mr. Bleeding
do it.
Edge.
Yeah.
You would know, but no.
Well, I just want to say before I let you guys go, I really appreciate all the years you guys have done this. It's like I said, it's been like a really pleasant routine of mine to just give you guys a call every Saturday morning and just talk through things with you. And the wealth of knowledge I've learned from you guys has really been a lot. So I really appreciate it.
Thank you. Well, we really appreciate your contributions. You've given us a lot of great hell, and we love that.
Deserve it.
We deserve it. Yes, we do.
Absolutely. There's no question.
Thanks, Jason.
Best of luck, guys.
Take care.
Thank you.
Bye-bye. And again, I want to reiterate, we're
not dying. We're not retiring.
Yeah, we're not retiring.
Well,
although at RetireMeet, one of the some of the advice given, and it was given by two different people,
which was
Joe Saul-Sehy and Christine Benz.
Yes,
the basic advice is don't jump right into retirement. It's not a on or off switch. It's not black or white. Ease in. And I think maybe this is part of a longer many-year plan for Tom and I to gradually ease.
One of my best pals, I told him a year ago, I said, I'm tired. He goes, and I said, I feel like I'm doing too much. He goes, well, you could try not working every Saturday.
And that was
a good point,
really, and that was what I thought. Although it's still funny, my wife is still like, well, so what are we going to do on Saturdays?
Yeah, so you'll find stuff,
something.
Yeah, exactly.
So give us a call 855-935-TALK.
He didn't even ask us about Tesla or anything.
No, he didn't.
So it's kind of sad.
It's all right. We all know what's happening with that. Let's go to Oak Harbor. James, welcome to Talking Real Money.
Hey guys.
Hey James.
Hey.
Hey, I'm actually kind of a brand new listener to you guys. I discovered you at RetireMeet. I found out about you through Paul Merriman, who I've been a listener to over the last couple of years, and he said he was going to be live in person at this RetireMeet meetup. So I kind of went in not really knowing much about your program or anything like that, but I must say I was very impressed.
Thank you. And please listen to the podcast.
Mm-hmm.
Okay.
Absolutely.
That's very nice.
Yeah. We appreciate
Paul got up on stage, as you may remember at the beginning, and said those two old guys are still working. He couldn't believe it. So there you go. It was kind of fun to hear from him. So. Yeah.
And I think, I was definitely one of the more younger folks in the crowd. I just turned 35, but it's never too early to start thinking about the future.
No, by the way, you make a great point because
thank you.
The story we were talking about at the beginning of the program about getting to retirement and going bankrupt, you have the power to change that, and you know it, and you're doing it. So congratulations to you for being smart enough to take this process into your own hands.
And share it with other people in your life, whether it be your siblings, friends, etc. Say, look what I'm doing. Not necessarily I'm listening to Paul or Don or Tom, but that I'm saving, I'm investing, and I'm thinking about these things because most of America, sadly, doesn't even give it any consideration until what we understand about 50 years old. Many people at 50 go, wait, in a couple of years, I'm not going to be working. I got to figure something out. It makes such a huge difference, as we alluded to at RetireMeet, to start early, put that stuff away, and let compound interest do its thing.
Yeah, good for you.
Yeah.
Good for you, James. Thank you so much for attending RetireMeet. Thanks for listening to the podcast, and please participate in the future. If anything comes up, you want to talk about it, we're here all the time. 855-935-TALK is our phone number. You can also send questions in at talkingrealmoney.com. It's so easy, and we really do want to help you out.
Tom and Don are talking real money. Reality radio for a really great future. We're talking real money.
This is wacky. It's still
What's
like
wacky?
35 and the snow is coming down as hard as it can. I look at the forecast, they're saying sunshine and 60 next Friday. Like, what world are we living in?
Dude,
it's crazy.
Your
Crazy.
world is far less wacky than mine. I got a
Are we talking
wackier
personal
world.
now, or are we talking weather?
It was 90 just a couple of days ago, and tomorrow's low is, or day after tomorrow's low is like 46.
not that I'm counting or anything either, by the way. 2 weeks, 6 days, I'll be in Arizona where it's going to be 100
You're
next
counting.
week, so.
You're definitely counting.
Not that I'm counting.
855-935-TALK. That's our phone number as we discuss the fuel for your existence, that crazy little thing called money. Let's go down to Olympia, Washington. And Dave, welcome to the show.
Hi there. Hey, one of these things that you're talking about, this 401k, is, that minimum wage increase gave those guys money, but then the costs went up around them, so they really didn't get a raise when you really, really look at it. The cost of houses, cars, supplies, health care, everything else that they've got going. Or I've seen a lot of these young guys go out and go do all this traveling while they're young, but they aren't saving anything. But they're sure getting the worldly experience. And then when it comes time for these guys to retire, they don't have the money, so the government's going to have to take care of them, so there goes everybody else's taxes. And that's what I see going on.
Yeah, it's hard to argue with any of those things, but I will say this. For all of us, by the way, this is so true. And if you're talking to young people, as we just did with James a minute ago, you got to pay yourself first under any circumstance. You just have to find a way. Yes, the prices of everything, and especially housing here in the Northwest, but it has to be part of money comes in, 15% or whatever, that got to go away. Just has to go away. You have to find a way. And I can't say it's easy because it's not, but it has to be done.
And there's an inherent problem when the vast majority of people heading into retirement do not have enough to make any kind to create any kind of income short of Social Security. And by the way, Social Security is not a government program. It is our money that we are taking back in payments. We paid it. We all paid in. It's not charity. There is no major government charity for retirees. Charity. There's Social Security, but that is
Medicaid.
Not charity.
Yeah,
Medicaid, but that's medical,
right.
And that's only, again, when you're older, you get Medicare, which you've paid into.
Correct.
So, it's not.
Well,
I don't see a lot of charity.
I've got an account with you guys.
Yeah.
I've got an account with you guys, and I still worry about not having enough money.
And
Absolutely.
you should. You see, that just means you're thinking ahead. And we have a problem, and I agree with this. We have a problem in that there is such a large cohort in this country that has no idea that they even need to save and invest for retirement. It is not well taught. It is not well shared. You got a lot of parents who didn't do it, and so they're bringing up kids who didn't do it. I don't know what the solution is, but I do know that at least there is a solution, and that is struggle a little bit more, put away a lot more, and eventually you'll have a higher degree of security like you. Thanks so much for the call, Dave. We really appreciate it. 855-935-TALK is our phone number, 855-935-8255. There's no easy answer. You can't just say, well, everybody needs to pull themselves up by the bootstraps, because there are just some of these folks don't even have bootstraps to pull themselves up with.
No, and this goes back because you said something very important there that many people don't even know they need to do something. That goes back to educating people at a young age. Now, this is something we've talked ad nauseum about. Right?
It's not being done.
The state of Washington still does not have a requirement of high school students to get any sort of financial education. It's come and gone in the legislature a couple of times. I think it's like 30 other states do. Now, we don't always agree with the curriculum. I know one part we've touched on many times, and I hate the stock picking game, but at least something's being done. So here in this state, yes, there has to be something so they have some idea that saving is important.
And we have to remember that it's difficult. This is a problem that's going to be hard to solve because it's a problem that is modern. Retirement is a modern problem. And this is something that I covered at RetireMeet. Retirement is not something your great-grandparents or great-great-grandparents were able to do. They didn't even think of it. It's a modern invention. It's 100 years old or so.
What'd you say? The turn of the previous century, the average age was like 47.
The
in the year
average life expectancy in the year 1900 was 47 years old.
Yeah. So saving for when you turned 48 was not really
it wasn't a thing. You worked, you died. You worked, you died. You died in the field, exactly. You died in the factory.
And remember, it was more physical things, less.
Well, we were an agricultural society then.
Primarily, I think it was like 90% of the workers were doing that.
This is all new, and finding a solution is very, very difficult, and changing people's behavior is probably the most difficult thing of all.
Indeed, I think you're absolutely right.
We are absolutely stubborn about changing the way we live, and preaching to people isn't going to do anything. It's like talking religion
singing.
or politics.
We could do that.
We could sing to them, yes, but please don't sing.
You'll sing. You're better than I am. So.
Not that good.
The actor.
The actor. 855-935-TALK is our phone number, 855-935-8255. This show is really about getting you on track for a better future. And if we can find a way to make this show more appealing to younger listeners, then we can at least start that process with some of them. So tell friends who have kids. Tell kids that, okay, yeah, they may be old guys, but they have a point. I mean, remember, a lot of people listen to those Car Talk guys. They were far older than us when they were on the radio. So
good point.
And they were popular. 855-935-TALK is our number.
Tom and Don are talking real money. Your guides to a really great financial future. Tom and Don are talking real money.
Welcome back to Talking Real Money. 855-935-8255 is our number. Just to close that topic, because you said two things are pretty interesting. You can't just preach, right? Because, that reaches a certain number of people. We can't sing. But let me ask you this, because this is done in other places. I think somewhere, is it South America? Anyway, so somebody said we should use that system. What about making people save? Right,
you mean
just a part of your check comes.
Work. Yeah,
it just comes out of your check and goes away.
Some companies are doing that.
Just like that's it. You got to do it.
No, that's a great idea. I think it's a great idea. Yeah. It's a great idea. 855-935-TALK is our phone number. Call us. We'd love to talk with you. We've got a lot of time. Let's go to Issaquah now. And Alan, it's your time. Welcome to the program.
Hi. I had a question about withdrawing funds once somebody reaches retirement. In my situation, I have $2 million of taxable investments, but probably about a half of that, $1 million, is in long-term capital gains. I have $2 million in 401k accounts, and I have about $4 million in a Roth IRA. So conventional advice, from what I understand, is while you're working, you want to use your long-term capital gains from your taxable investments to withdraw money on, to live on, giving a chance for your 401ks to continue growing tax-deferred. And then the Roth IRA account, you don't want to touch till the very end, so it continues to grow tax-free. My question is, once I stop working, since I'm going to have to take required minimum distributions once I reach 73, then I think it makes sense for me to start withdrawing from my 401k accounts first. But then I'm thinking, if I need more money after that, I should start withdrawing from my Roth IRA account, with the thinking that once I die, if I never touched the taxable investments, that $1 million in long-term capital gains pretty much gets eliminated because my beneficiaries inherit that at a stepped-up basis. Is that correct?
Everything you just said is correct. However, here's how I would look at it if it was me. I would say, and by the way, how many years until you retire, and then how many years until you have to start pulling the money out? Yeah, your required minimum distributions. How long do you have?
Well, right now I'm 67.
Okay.
And I'll probably work for another 1 or 2 more years.
Okay. So here's the way I would look at it this way. I would say, here's the income I need. I don't know what that is. How much, is it $200,000 a year or whatever it is?
$100,000, $50,000, whatever the number is.
Yeah.
What's that number? You got to know that. Everybody needs to know that number in retirement.
And you need to be accurate.
That's the most important number of all.
I talked about this at RetireMeet that most of us are in denial about. Anyway, Then I would say, okay, let's look at all the places the money can come from, including, and I hope for you, you're going to probably wait for Social Security until 70. That's going to be a certain amount, right? Guaranteed coming in. Then I would go back and say, okay, there's how much I need. What's the best place to take that from a current taxation standpoint? Because none of us know the future about rates, what that's all going to mean in 20 years. But we can tell you that today it might make sense to take some from the taxable account because there you're getting long-term capital gains tax rate, some from the pre-tax 401k, and sometimes it might even make sense to chip in a little bit from the Roth because there you're not getting any taxation, so you're not moving to a higher tax rate. To me, that's more important than the other things you mentioned as priorities.
Right. What we're talking about here, Alan, is a rule of thumb. Rules of thumb are not particularly helpful in individual circumstances. You have to look at yours. So what Tom is saying is, once you get to 73, you take that RMD, you look at what your number is that you need to live off of. So let's say you need 75,000 and the RMD is 50,000. Well, you need another 25,000. Now, the best place generally to take that would then be from your taxable account because you get taxed at a lower bracket, a much lower bracket. Generally.
Long-term, gains.
But see, now you're throwing a wrench into this with the stepped-up cost basis, but that's only if you are really sure that you're not going to need any of the money from that taxable account. If you are absolutely positive you're going to pass that along to your kids, and I don't know of anybody who's unless you're in amazing shape, you may need that someday for emergencies. So I would stick with the rule of thumb with an adjustment on it, like Tom mentioned.
And you're really, to say this, it's going to sound like a sales pitch. You're a great candidate to talk to some professional and have them run the numbers because you can go year by year and look at exactly how much you're going to take out, exactly the tax rate on each one of those things, and do it from that standpoint. And it's great if you can help your kids and the rest of it with the step up. That's wonderful. Far better than leaving pre-tax 401k money, obviously, which is going to get taxed at
if
regular
you're going to leave
rates.
money, you don't want to leave them IRAs and 401ks.
Be better, yeah.
You can leave them Roths. Those are fine.
Okay.
All right.
All right. I think, meeting with somebody to actually do a calculation.
I would.
As every year. Yeah, makes sense.
Yep.
Okay. Thank you very much.
All right, Alan. Thank you for being a part of the show. Let's go to Gig Harbor. Ray, welcome.
Hi, gentlemen. I'm new. I was flipping channels and started listening to you. I didn't know if you have the format like Mad Money with Jim Cramer and talk about individual equities.
Of course. We talk about anything money. We talk about everything. Although you may not like our answer as much as you'll like Kramer's, but
and we quit throwing TVs a few years ago the way he does because I'm not strong enough to do that anymore. So,
my wife and I are retired nurses. We own a car dealership, and I've been a trader for 40 years. A CNBC junkie. I wake up at 3 a.m. and I watch the future. I'm just wired, and amazing opportunities right now in the stock market, but. Instead of giving you some stocks, I wanted to just talk about the car dealership. We have a car dealership that the last 10 years, last 5 years, I've always sold about 40 cars a month.
Okay, hang on. Let's stop right there because we got a break coming at us. We'll talk about
Neither of us need cars right now either, I don't think.
No, he's not trying to sell us a car.
Oh, okay.
We're talking about the car dealership, and he sells about 40 cars, and we'll go from there after this.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
We are talking with Ray in Gig Harbor. Ray is a new listener. He's a stock trader, and he has a car dealership.
Oh,
and he sells about 40 cars a month, and you had a question about it, Ray.
Well, I wanted to give you guys a little bad news because I see a lot of behind the scenes. I spend my Monday, Wednesday, and Friday at the auctions, Manheim Dealers Auto Auction. I buy a lot of cars. All our cars, my dealership's in Bremerton. We usually have 50 in stock. That's why right now I'm holding around 40. However, the last 2 years, it has gotten really ugly. A lot of the used car dealers, they're all out of business. I don't know if you drive around and notice vacant lots everywhere, but with this inflation, every Monday when I go to the office, I have a stack of declination letters from credit unions. Buyers are getting turned down, and all our cars are under $12,000 usually. Every so often we have $12,900. people out there, real people, have zero money. And over, I try not to hang out at the dealership. I don't like to be there. I just buy the product.
I just own the darn thing.
It is very bad out there, guys.
Yeah.
And, being a trader and stuff, you can watch CarMax and hear what they said. I'd short everything now, but there's a lot of great opportunities. But
and by the way, we could, Ray, we appreciate the call. We could very well have another recession. We build that into everything we do. We truly believe that it's at some point the markets are going to get hit hard, but the problem is we don't know when, and we don't know how long they'll last. And we've been around watching these things for a very long time, and every time we get into a bad market, it always seems the worst right before it turns around and goes back up, and people are terrible at predicting these things. We feel them, but we really stink at predicting them on both sides over and over and over again. As a matter of fact, that's the topic for the next hour.
Yeah, and more explicitly, your portfolio, your money should be designed for the hopefully good times, but for the worst of times, which could be starting Monday. We don't know.
Right.
You should be ready for that.
And we believe that there's nobody out there who's smart enough to predict this stuff, again, consistently over and over and over again. And you can't just be right once. You have to be right going out. You have to be right getting in. You have to be right going out. You have to be right getting in. And there is no evidence that anybody pulls that off consistently. None. As a matter of fact,
that we found.
Almost every guru out there has a terrible track record when looked at realistically based on their actual. Jim Cramer's track record is horrible. Horrible.
Yeah. So, and to that end, by the way, you can send us questions, talkingrealmoney.com. You can write them for the Tom's. The war on trees has become the war on Tom. They keep dropping branches on me. They hit my wife's car and damage
I knew
that
that would happen if you tipped off the trees.
Or you can speak them to Don, who turns them into a wonderful podcast every Friday. And speaking of podcasts, learn to get Talking Real Money as a podcast. Go to your phone, download podcasts, type it in. It's as easy as that, and we'll send it to you every single day.
If you have an iPhone, it's already on there. It's that little purple thing with the little squiggly person.
Push the button
kind of
and type us in.
You type in Talking Real Money. But to make it even easier, if you don't want to try and find the app, just go to talkingrealmoney.com, scroll down a little bit, and there's a podcast player right there on the page. We make it really easy. And we will be a podcast only in a few weeks, starting in April of 2026. 5 podcasts a week, just like now. It's just there won't be a live Saturday show that gets turned into a podcast. And by the way, if you want some help from a fee-only 100% fiduciary advisor for free, with no obligation and no high-pressure sales pitch, seriously, just go to talkingrealmoney.com and look for that button that says Meet an Advisor.
The opinions and views expressed on this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions.
Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy.
Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor.
Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services.
Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit talkingrealmoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. I think I need a nap.